Hello, Jim here. Last month was one of my best months trading options. I made over 12,600 in many different strategies. I want to talk about the different option strategies I used and also go over my dividends, my interest, and how I did overall for the month. So I believe you're going to find it well worth your while. So be sure to stay until the very end where I'll go over the specific trades and pretty much what my account overall looks like and what kind of return on a monthly basis that I made. So let's go ahead and jump right in. Okay, I typically like to mention at the beginning of most of my videos the fact that what I think is the most important part of any trading or investing is picking great companies at great prices. What do I like to look at criteria wise? I like to look at profitability, return on equity, return on assets, cash flow from operations. I also like to look at debt to equity. Is it at least 50% or below, meaning for every dollar of debt, they have $2 of equity? I also will look at their PE and compare it to the sector. Are they way overpriced? For instance, if a stock is got a 20 PE, but the sector, has a 10 PE, then that's a pricey stock for that sector. So I look at those things, and price does matter. Eventually, it may not matter at certain times when you have a lot of momentum, but overall, long term, it does matter. And usually, companies will kind of drift back to the mean or the median related to what they should be priced at. These momentum plays that go through the roof, they typically don't stay that way, especially if you're a long-term investor like myself. So like I said before, I typically like to mention that at the very beginning. Now, what makes me successful and probably some of the best traders in my memberships is the fact that they work with numerous strategies. They don't just stick to one strategy and take it all the way, and kind of repeat it every month. I work with a number of different strategies. I work with covered calls. I work with cash secured puts, vertical put credit spreads, iron condors. I'll run the wheel weekly, monthly, and I do it slightly different. I also have different types of wheel trades. I have, one that's called the shielded wheel strategy. That's where you buy 100 shares, then you sell a vertical put credit spread, and you sell a covered call. That's worked out pretty well. But what I find over time as you trade, you'll notice that some strategies stop working at times and you need to switch to something else. And the same can be true of stocks. Like at some point, you might have great premium on a particular stock or ETF. And then literally the next month, it's just not there. There's not very good premium at that point. And then what's best to do is to look at other opportunities, look at other stocks. I like to use a watch list. I have what I call my favorite ETFs and my favorite stocks. And I will look at that daily. I'll look to see who has better premium. I'll also look at bar charts and seeking alpha. Bar chart, I like to use it to look at the volatility, open interest, volume, and just see overall, how do options look for that particular company. But I don't look past the fundamentals. To me, the fundamentals are key. You may have a company that has huge volatility and is, really good options premium, but it may be a terrible company. It may be having major losses, and that's part of the reason why it has such high volatility. So it's really key for me and for most people out there to look at both fundamentals. Now, I do use technicals. I like to look at the Bollinger Band. I like to see, if I make this trade, where does it fall on the Bollinger Band? Is it near the the lower bar? Is it, it kind of gives me an idea at that point in time, is this a good trade? I've already determined it's a good company and I want to make the trade, but is it a good trade at that point in time? And then what's so interesting about options, at least in my mind, is it's multiple cash flows. You earn, covered call premium. And I kind of look at it as different premiums. So I look at covered calls as one cash flow. I look at puts as another cash flow. And then I also at times will look at the wheel as one type of a particular cash flow compared to some others. And then I like to invest in companies. I like to pick up the appreciation. At times, though, it can work against you. You may, pick up a stock that declines. Great example is Intel. It's dove big time over the last couple of months. Or Polaris has also gone through a rough spot. But I do, in most cases, most companies and most ETFs do kind of trend upwards. It's only at times, like even a company like Intel, it may only be temporary. They may, do better down the road. And a company like Polaris, I do think will do better down the road. I do believe we've kind of gone through a tougher time, even though, Trump's going to be in the office and we had the Trump bump. I still believe that a lot of people were really hurting out there. I think inflation has hurt people, and the huge gains in house prices and a lot of things just cost a lot more. So I think as we get into the new administration and inflation comes down, mainly because of the price of oil, if he does drill baby drill, the price of gas is going to come down, the price of energy, and that has an impact on everything. It'll cause other things to come down inflation wise, and overall it'll cause inflation to come down. So I think companies like Polaris will benefit from that, and especially with cheaper gas prices. They have mostly motor, gasoline powered vehicles. I don't. They may have some electrical, but I think it's mostly gas powered. So I do think things will change, and also the lower interest rates. Now, I don't believe the Fed's going to cut rates in December. At least it's my 2 cents, and I could be completely wrong. But I think the economy isn't doing great, but it's not doing horrible. So I think they may hold still or stand it where it currently is until early next year to have maybe determine what does 25 look like, and then maybe they'll do another cut or two. I also wanted to just a quick mention of the option wheels. I'm still doing different types of option wheel strategies. I have one that I'm doing monthly with just cash secured puts. I'm doing another one with vertical put credit spreads that I'm doing a little more often than weekly. It's almost like every 10 to 12 days I'm doing it. I just rolled a bunch of them. And that I think has really helped my account pick up more premium than in the past. And I continue or will continue to do that, but I'm also going to continue to do what I call my bread and butter vertical put credit spreads. I'm going to continue to do those. They've worked out the best for me over the years, with the exception of covered calls. Covered calls also do really well. And having a balance of both. So if you have both calls and puts, then when the market moves in one direction, if the market drops big time, the covered calls become very profitable and you can close them. Or the reverse, when the market goes way up, a lot of your spreads or, your vertical put credit spreads or your cash secured puts become very profitable and you can close them. So it's good to have a balance of both. And then finally, I do believe the market is still very high. So it's important to have what I'm calling a risk management way of thinking. This is where you're buying, long calls or long puts to protect yourself, just in case the market shoots one direction or the other. By purchasing those long strikes or the long put or even the long call, you minimize your chance of taking, or missing. Well, if it's a call, the chance of missing an upwards opportunity, and if it's a put, protecting you on the downside. I do find by buying the put, it gives me more choices in managing the trades. I've had some trades where I've sold the long put and then I've turned the vertical put credit spread into a cash secured put, and then I rolled the cash secured put. I've had other instances where I wanted the stock. One example is UPS, so I allowed it to be assigned to me. Then I sold the long put, grabbed the cash, lowered my cost basis for UPS. And since then, UPS has gone up, and I've been able to make some pretty good money selling covered calls on it. So by buying those long puts, and again, also potentially long calls, you do, in my mind, you do have more choices when you get to managing the trades. And that's what I found. It gives me more tools in my tool chest. I can potentially have 3 or 4 choices that I can do with that particular trade versus only having 1 or 2 possibly. So just wanted to mention that. This next part of the video, I'll go into how I did in October. I'll share with you my trades. I'll also talk about my dividends and interest. and how I did overall for the account. Each account kind of does a little bit different. So, and I did want to mention, please hit that like button. Please subscribe if you're curious about my memberships. Details will be in the description. They're priced right. I'm not pricing people. I'm trying not to price anyone out of it. I have a starting basic membership for 15, and the most expensive, which includes coaching, is only 40 a month. And it's month to month. You don't have to commit for 6 months or a year. You can literally join for a month and leave the next month. I've had people come and go. I've had people move from one tier to another tier. So I've set it up that way. I don't really want it to be where I want to learn from my members, and I'm definitely learning from my members. I actually made a few trades today, which was a suggestion from one of my members. So again, if you want to take a look, details will be in the description. Let's jump into the next part of the video where I'll go into the trades. Okay, this is my October planning sheet or worksheet. This is what I share with my community typically every Sunday. They either will sometimes leave my trades and they'll work through them and try to get an idea of specifics on how I trade. Some will just delete it and they'll put their own trades in here. But the planning worksheet also has favorites where I share with the community the stocks I like at that time or at this time. I also color code them. The yellow just means it's a little bit pricey. It's not colored at all. It just means it's not a great price, but not overpriced. If it's green, then it typically means it's a good price at that time. And then I have checklists. I have trade rankings. I have guidelines, goals, dividends, all sorts of details. And I'm not going to go into detail on every trade, but you can see I list them here by trade date. So I first did a Coca-Cola covered call, brought in some pretty good premium, $327 on that particular trade. These color-coded green are all new, so I did new trades on Micron, Global Networks, Russell 2000, Agilent, I think is how you say that, Agilant, Agilent. These were all vertical put credit spreads. Again, my bread and butter. I do probably more of those than anything else. And you'll see that at the bottom of the worksheet. So I did one on Micron. It was a 90.80. And it brought in some pretty good premium, 275 in premium. This is the required capital, 1724. That's just the spread times 100. So if it's a $10 spread, it's times 100 times the number of contracts. So it's 2,000 because it's two contracts minus the 275.26 that brings you to 1724 is the required capital. It's like 129% yearly return. The assignment coverage, it's just how much cash you would need in order, if the Micron shares got assigned to me, that's how much cash I would need. This is something that's just helpful for me to keep track of. That way, when I'm looking at one of these stocks that may be in the money or deep in the money, I have a good feel for how much cash I might need. I typically have enough cash to cover any of these that get assigned. And I don't have very many get assigned very often. I think over the last 6 months, maybe 5 companies have been assigned to me. So next is Global Networks. I think it's Global Payment Networks. It's, again, a vertical put credit spread, 90.80, expiring on 11/15. All of these were about, I guess, monthly. So I brought in 258, required capital 1741, 123% yearly return based on a 44 DTEs. You can see the formula up here. It's just premium divided by required capital and then adjusted for the year, and that's how I come up with that. And again, the assignment coverage is how much cash I would need to have 200 shares assigned to me. Because again, if they're assigned to you, you still need to have enough cash to cover those shares. Even if you're going to put them to someone else because it's deep in the money with both strikes, you still need to have the cash available. And then IWM is the Russell 2000, another vertical put credit spread. and it brought in 239. So not as quite as profitable. And again, with Russell 2000 IWM, I don't plan to ever own it. It's just a trade I like to make in order to earn more income on a monthly basis. So sometimes I'll just do a few IWM trades. It's gotten a little pricey recently, so I haven't done as many recently. But typically in the past, I've done 2 or 3. Now, Agilent, excuse me, I know I'm pronouncing that wrong, but it's 135, 130, so smaller spread. At the time, it was 145. This one, I believe, also expired out of the money. Premium was 217, again, because it's based on a smaller spread, which I think I must have that incorrect. Oops. Yeah, I think that may be incorrect. 135, 130. So it actually, the return may be higher because the spread's a little bit lower. Then I had Broadcom. This one I just rolled again today, but this position I closed. And I'm trying to close more and more of my positions, but I'm still mostly rolling. So CVS, this was a covered call I rolled. And I believe I kept it at the same strike. Yeah, I kept it at 65, and I brought in some pretty good premium. So even though CVS has been one of the companies that hasn't done as well, they got hit hard with earnings last time. They haven't. They're not quite profitable, but if they go up another $5 or $10, they would be profitable. Mara, this is my only Bitcoin related trade. It's 4 contracts, a vertical put credit spread 17.13. At the time it was in the money. It goes in and out of the money almost on a monthly basis. And they typically are very profitable trades. So I've made 180 on this last one, but since I've been trading Mara, made almost $1,400 at that point, or at this point in time. Required capital 1410. Again, it's 4 contracts, $4 spread for each. So the required capital isn't bad, and 114% return. And then for 400 shares, I would need that amount, 6610. So next, Google, and I've done quite well with Google. This originally was a shielded wheel call, and it's at this time the vertical put credit spread side of it has expired. So I'm just continuing to do the call. So I rolled. I moved it from 12.20.24 to 3.21, kept it at 180, and it brought in some pretty good premium, $451 in premium. This is my cost basis, 164, and it's like a 6% return. So they pay a small dividend, so it's almost like earning a dividend having the covered call. IJR, one of my favorite ETFs, and it's a covered call. I just did another roll and brought in, even though the covered calls don't have the best return, they do have some pretty good premium. I brought in almost $800 in premium, and it's like a 3%, mainly because I rolled it all the way out to January 15, 26. Next is Tesla. This one I closed. It was kind of protection. So at one time I was trading Tesla, and I was a little worried it was get me into trouble. Actually, no, this is one I had for a while. I closed it. It was way out of the money when Tesla went way up. Shopify is one that has gone up quite a bit. This is a covered call that's been in the money, and I keep rolling it up. So I rolled this up, went out to September of next year, rolled it up to 85 from 75, and brought in, again, some pretty good premium. So if it gets assigned to me, it would be almost like, I think this is for 2 contracts, so it'd be almost like 88 would be what I'd be getting for it. And I believe my cost basis is below 60. Dell is another one that's worked out pretty well. At one time, it was also in the money. It was a vertical put credit spread. This is the one I talked about early in the video, where it was originally, I decided to manage it. I sold a long put, turned it into a cash secured put. Now I've been rolling it as a cash secured put. It's become very profitable, so I'll probably end up closing it. But I rolled it, kept the same strike, and brought in $451. So a good piece of change. And it was like an 11% return. And that's this is based on, since it's a cash secured put, these two values are the same because you need all the cash to cover it. So it would be what, I guess, yeah, two contracts. So that's why it was so expensive. Williams Sonoma. And Williams Sonoma is a great company. They've been all over the place. They shot through the roof, then they drop down, then they shoot back up. They do really well during earnings. Vertical put credit spread 140, 130. And I've had this one for a while. I just recently rolled it again. And I rolled it out to 11.15, 24, 140, 130. Brought in some pretty good premium. One of my highest returns of any of my vertical put credit spreads, 182, because it was only for 36 days. And then I talked about maybe I should have gone down in strikes, but again, they had earnings yesterday and they shot through the roof. Broadcom, another one. This was a new vertical credit spread, 155, 145, expiring on 11/29. It was 181 at the time. And I brought in 241, and this was like 102 yearly return. Required capital 1758. And I just rolled it again. The semiconductor sector got hit hard recently. It recovered a little bit, but it's still not where it was before. I believe it's at this time it was 181. I think Broadcom got down to around 170. Also did another Square. This is a cash secured put wheel. I believe this one has also expired, 65, but it brought in some pretty good premium, 293. Now Square, just like some of the others, has just shot through the roof. I think it may be close to 80 currently, and it's like a 49% yearly return. So this was one of the wheels that I did. You can see here it says wheel. So I also rolled UPS. This was another, this is a covered call. So when the shares got assigned to me and I sold the long put, I've been able to sell covered calls and do pretty well. So at 130, I think my cost basis, I'll have my cost basis over here. It was a little bit at 125 at the time. I rolled it out to 417, upped it to 135. My cost basis is, so that's for 200 shares. So it's, I think, around 115 or 114, something like that, maybe, or 113.5, something like that. So I've got a pretty good return on that. And in Chewy, this is another wheel trade that I've been doing. This is the monthly wheel, and it expired outside the money too, and brought in some okay premium. This is for only one contract. This is where I'm playing with the wheel, trying different strategies. And I do encourage that. People should try many different strategies. Now here's NVDA. I do trade NVDA. I closed this one. It was a vertical put credit spread, so it worked out quite well. Pins. This is the only cash secured put that's been assigned to me in the wheel. So I own 100 shares of Pins. And they got hit by earnings. It was 33, I think at the time. They were 33.90. It's dropped into the high, like 28, I believe it currently is. So I'm hoping to write a covered call. I brought in 204 in premium. So my cost basis is like 31. So I'm hoping it'll recover and then I'll write a covered call. I'm waiting to write the covered call. Hopefully it won't be too much longer. Polaris. This is one that's been hammered recently. It's down, I think it's like $65, but it was as high as like 120, 130 at one time. I rolled it and I picked up some more premium, 415, so I'm like I said, I'm thinking Polaris will come back at some point. XLK, this is new trade for me. This is another ETF. This is the tech sector ETF, and this was a vertical put credit spread. 215, 205, and it worked out well. I brought in 220. Well, it was 229 at the time. I brought in right around $219, and it was like 145% yearly return, mainly because it was only for 31 days. And this one also expired out of the money. Applied Materials. This was a roll, and 175, 165. They also came down big time. And I brought in some pretty good premium by rolling it, another 336. So I brought in 653 since I've been making this trade. And this was probably my most profitable trade. So I recently did another one. So I really like trading Applied Materials, Qualcomm, Twillo is another one of my favorites, but it's also shot through the roof. So I did a cash secured put wheel of the wheel, and that was in one of the videos recently. And again, it shot through the roof. It's now, in my mind, too pricey, but I brought in 164. Again, this is for one contract. It's like a 32% return. So you can see a lot more wheel trades. That's what I was talking about. It's a new strategy, and it's bringing in some pretty good premium. Another NVDA, this is a covered call, and these are in my Schwab account, and I kind of move it up and down. So at this point, it was 140, and I rolled it up to 145, went out to March, brought in some pretty good premium, 543. So since I've been working with NVIDIA, I brought in a lot of covered call premium. No one has as much premium as they do. NVIDIA is pretty amazing. So, and this is another one that expired. This is not, is it Franklin Resources? I'm trying to think. I think it is Frank. It's one of the financial companies, Ben Franklin Resources, I believe. NTAP, this is another one that expired, a vertical put credit spread that worked out pretty well. These all expired on 10/18, so 10/18 was the big month. So I had Qualcomm expired. Surge was a purchase call. It expired. Surge has also had a rough time. They popped a little bit today, so I don't know what's going on with them. But T. Rowe Price, another financial company, and that's the first vertical put credit spread I did with them, and it expired well outside the money. So I may do another trade with them. Next is XLE. This was a new trade that I did. And I've done a lot of trades with XLE, and none of them have been assigned to me. So it's worked out quite well. This was an 85.74. The 74 was a mistake. I thought I had a 75 in there, but I had a 74. It was 89.82 at the time. And then it brought in some pretty good premium, 62%. Typically for the ETS, they have lower returns. I did one on Johnson & Johnson. This one I think is in the money. With Trump winning the presidency, the pharmaceuticals are taking a hit, and that's probably going to continue. So this one may get assigned to me. 155, 145, 22 delta, and it brought in 199. So it had pretty good return, not great. And then I rolled a Schwab covered call, 75, and I believe I rolled it out to 321.25, kept it at 75, brought in 487. Did that primarily because the premium was so good. So I'm almost done here. This is, who is that? That's Seagate, I believe. Another new type of trade for me, vertical put credit spread, 95.85. This one, I believe, just recently expired, but it brought in some pretty good premium, 227. An 81% return. Not great, but pretty good. And then CLS, this one I closed. CLS has been one of my favorites to trade, but like some of the others, it shot through the roof recently. And then Zoom, I rolled the covered call in Zoom. And Zoom used to be my favorite trade. I don't make it as much as I used to, but it brought in 327 in premium. Not the best return. It was more of a leap roll. And then I did another roll with Coca-Cola. I did 4 contracts and rolled it 67.50, and I believe I went up. No, I kept it the same. I rolled it out to May and brought in some good premium, 609. So I think I'm almost done. BP, British Petroleum. I own some of them. I also like writing vertical put credit spreads on them. So this is a $5 spread. And did pretty well with it. 191, 75% return. It's a little bit of a safer play. Now we're back to Zoom. This is a vertical put credit spread that I closed. I don't believe I have any more vertical put credit spreads on Zoom. I'm not sure completely. AMD, I rolled them towards the end of the month, and I kept the strikes the same. Rolled them out to 1220 from 1115. Brought in some pretty good premium. This was a good trade, 89%. That's required capital. So, and then Google, I also closed Google, one of the trades. So The 100 shares I own of Google are ones that, again, I did with my shielded wheel where I buy 100 shares. I then run a vertical put credit spread on one contract, and I also do a covered call on the new ones I just purchased. So you can see if I come down to the totals here, these are all the other trades that are I did not trade on, but you can see I had 7 covered calls, 5 cash secured puts, 19 vertical put credit spreads, so a lot more puts than covered calls, and I did a total of 31. Now, if I look, I did 9,191 and 88 cents in premium. The required capital 205,519, and it's like a 4.47% return. Now, that's just based on the column up above related to required capital, which is just this column. I mean, I have a lot of other assets in those accounts, but that, the required capital was 205, and I was able to bring that amount in. So if you're just a pure trader, you potentially could make that kind of a return if you just got, cash in your stock or cash in your account. Now, average premium 296.51, daily premium 437.71, and then daily total, which includes interest and dividends, is 602. So I'd still bring in quite a bit in dividends as well as interest. So if I broke it down by particular types of accounts. So my Schwab brokerage, I didn't do a whole lot of trades. It'd be like adding another 3% on a yearly basis. Part of that is because I'm financing what I call a barn dominium build, and I've paid a lot out of that account to, pay for different aspects of it. Stuff like the permits, the grading. We're getting ready to pour concrete and do other concrete work. So I'm not doing as much trading in there, and I'm taking a lot of the cash out. And then Fidelity Retirement is where almost all the trades were. This is pretty close to $500,000, a little more than $500,000 actually. I think it's like 525. So it's like a 1.58% return on a yearly basis, nearly 19%. And here it is total, so 9,191, and then it's almost just shy of 1% on a basis of a bit over a million. $1,037,000 is what that's based on, and it's like a 10.64% return. But again, on a lot of my accounts, I do have a lot of stocks. The one thing I'm probably missing here is the appreciation or depreciation in some stocks, like Intel went down a lot, and so did Walgreens. And this is actual numbers, 3408 in interest and dividends. So that's how much I made in all these different accounts. More probably in my Schwab brokerage accounts, probably closer to 2,000 a month in those, and then 1,400 in the other accounts. And that's how I came to the 12,600 for 1 month. And then if you calculate this, it's 1.22 based on the total value of the accounts, and then pretty close to a 15% yearly return. So again, one of my best months. I have a few notes. We can look at the notes real quick. Fewest number of trades due to holidays and vacations. Typical month is more like 40 trades. So I did 31 trades, which that's a little more than one a day. We had 22 or 24 trading days. So in some days, and I find there's days I don't do any trading, and other days I do 1, 2, maybe 3. This 31 does not include the closed trades. So sometimes I'll close a number of trades, but I didn't include that in there. The calculation of this 9,191.88 does include any trades that I closed and the price that I closed them at. And you can see that up here. Those are all expired. But if you look at this cash secured put in Tesla, I paid $7 to close it. So I'm pretty cheap. I like to not spend a whole lot of money closing these positions. What other notes? Yeah, 11 closed or expired trades, 14 new trades. So 83 active trades this month, staying near 8 trades or 80 trades each month is what that's supposed to read. So let's put 80. And then I believe this is November 21st, and I believe right now I have right around 80 positions open. I end up closing quite a bit around the 15th of November. So that's what I wanted to share with you guys. Let me know if you have any questions, concerns, comments. I don't have any assignment. Nothing was assigned in October. But if you have questions, let me know if it's about a particular stock, or if you think there's another stock or another company I should be looking at, or maybe you didn't like one of the stocks I'm currently trading, or you think I'm wasting some of my capital trading in that company. Leave a note. Let me know. I try to answer most of these comments within 24 to 48 hours. And as always, thank you for taking the time to watch this, and look forward to seeing you next time.